Hi there, I'm Realtor Bert Taddei, and welcome to another edition of Sipping Coffee or Tea with Realtor Bert Taddei. This is an educational video series, and we will attempt to maneuver through the hype, the hoopla, and yeah, even the media negativity surrounding our real estate industry. I'm located in San Antonio, Texas, and I'm broker owner of Santino Properties LLC, a boutique brokerage. It helps buyers and sellers win in a competitive San Antonio marketplace through the unique and effective use of marketing. So this video series is meant to educate the public, be a resource to everyone, and hopefully we're of service. Be sure to like the page, sign up for alerts for when we go live. And feel free to share the content here on whatever platform you're watching this on. But this is video number 2 of a 4-part video series, and this is real estate investing. So our first video was basically the topic was the basics of real estate investing, and this next video is going to be tips for buying rental properties. So let's get into it. The first thing I'd like to talk about is, of course, to conduct thorough due diligence, right? And that just means basically things as basic as property inspection. It's always important to conduct a comprehensive inspection to identify any potential issues or repairs that are needed, right? So I would tell everybody that works with me that I don't recommend that you get a property inspection. I insist upon it, right? And if it's commercial properties, by the way, it's going to be a lot more due diligence. We're talking, instead of 7 to 10 days on a residential property, which is pretty standard in San Antonio, you're talking about weeks of due diligence. So my commercial partner that I work with, he's a commercial broker, and I work with a lot of his residential clients, and he works with my commercial clients, and we're just now going to close, I think, this week on a medical plaza that one of my clients owns, that I referred to him because, listen, I mean, there's a lot of intricacies, and frankly, he's a lot better versed than I am on commercial real estate. I mean, that being said, I am pretty well acquainted with him, have a really good relationship. So if you have commercial needs, reach out to me because he's really terrific. And so, but this took months, is my point. So due diligence on the commercial side is going to be time consuming. Residential is not nearly as long, right? But do a thorough market analysis, right? Work with a real estate professional that can help you with a market analysis that will give you local market trends. And this person will also ensure that there's a demand for rental properties in that specific area. They'll also help you, your real estate professional will help you compare rental rates to estimate potential income. So I have a seller that I've been in contact with. Well, she's been in contact with me. We first met, I don't know, 2-3 years ago. She got one of my marketing pieces, and we struck up a nice conversation. Well, unfortunately, she's going through a divorce, and so she called upon me for my expertise and what to do with her house. And we came up with a really terrific idea, which is maybe we can find her an investor who can lease the house back to her, because she's on a very fixed income, right? Senior citizen. And she's just not going to be looking to go back to work. So, and she can't afford the house payment by herself. So can we find perhaps an investor who will buy the house and lease it back to her? That's certainly an option. And it's one of the many ways that I like to consult with couples that are divorcing. To give them some sound advice, right? And to different options, because most salespeople are just going to say, "Oh yeah, sell it," because they want a commission check. That's not always in the best interest of the client. Let's find out what those interests are, those best interests, and let's conduct a thorough analysis of the situation with them by sitting down with these sellers. Are they sellers? And are they not sellers? We'll see, right? But through that process, we can guide them to what makes the most sense given their specific and unique situation, right? Because selling is not always the best option. So we can consult with you on things of that nature feel free to reach out to me, 210-376-TALK. If you have any questions, I'll be happy to answer them. I like to be a resource to the public. So, but part of that is, of course, offering this gal, the rental comps for the area. What is, and the sale comps as well. What is the number that her neighbor should pay her that's fair and equitable for everybody to pay, and then what is that rental rate that is normal or standard for that area, given recent empirical data. So those are the kind of things that we do, again, to consult with our clients and to give them competent advice. So the second thing I'm going to say is to calculate expenses and cash flow, right? So when you're investing in a property, your operating expenses are going to need to be factored in, which include property management, fees, maintenance costs, insurance, property taxes, utilities, vacancy rates, by the way. If it's a multifamily property, what is the typical vacancy rate? And if they tell you anything on a multifamily, fewer than say like 16-17% vacancy rate, anything less than that is going to be maybe, just maybe, fudging the numbers. Don't ever believe that it's 0% vacancy when you're going to invest in a property. If a sales professional is telling you that, they're just trying to sell a property. No property is 0% vacancy, right? Not even a fourplex. So find out what that is, and again, by hiring somebody to work on your behalf as a buyer, then you're not going directly to that listing agent. That's probably going to help you, because at the end of the day, the listing agent cannot dispense advice to you in Texas. Why? Because they already are under a contractual obligation to the seller. So they're looking out for the seller's best interest. So if you're looking to get a good deal or to negotiate with the listing agent, they can't consult with you. They can't give you advice, right? Because that's dual agency, and in Texas, dual agency in the real estate business is against the law. So look for those operating expenses. Also look for cash flow. Ensure that the rental income is going to exceed the operating expenses to generate a positive cash flow. Use the rental property calculator to estimate cash flow accurately. And again, if it's a commercial property, they're going to be looking at what is the DSCR, debt service coverage ratio. Okay, so that's a very, very important aspect of commercial real estate, right? What is the DSCR? If you're getting financing, the bank has to know that that information, and you have to provide that to them through due diligence. Say that 100 times really fast, right? Number 3 is choose the right property, right? So condition and age is important, because newer properties are going to require less maintenance, while older properties might offer a value add opportunity through renovations. However, remember that an older area might be a declining area. There might be some blight. There might be some challenges with the neighborhood as far as crime is concerned, things of that nature. And by the way, you can never get a second chance to buy in the right area. If you buy in the wrong area, it's going to bite you 10 times out of 10. Ask me how I know. I don't own the property anymore, but oh boy, I didn't do my due diligence, which is exactly what I'm telling you to do. But listen, a lot of these videos are predicated not only upon research, but I also am dispensing advice based on experience. All the years, over a decade now in real estate business, and I can tell you, you learn from experience for sure. So choose the right property, right? Size and layout's important. That's another thing, right? So consider the property size, the layout, the amenities of the property. Properties with appealing features, such as modern kitchens, parking, outdoor spaces, tend to attract more tenants. And by the way, that's the other thing. I talked about value add, right? So value add is basically, or a value play, as they say, is going to be whenever you're investing in a property and it has the potential for renovation and improvement of rent based on the renovations that are made. So I've renovated an entire complex before, apartment complex that I owned, and I renovated all the units, forced the appreciation of the property as a whole. Also, raised the rents based on the apartments being more appealing, right, than in their classic condition when I bought the property, right? So that's another thing you can do. The fourth thing in the last point I want to make is, really to screen the tenants thoroughly. Again, you're gonna never get a second chance to screen the tenants thoroughly, and use the tools that are out there, but you have to conduct the credit and background checks. Very, very important to conduct credit checks, verify employment, income, rental history, references, eviction, a criminal background, eviction if there are any. So I pull reports when I'm helping my clients lease their properties, because I do that. I don't conduct property management, but I do help clients say, hey, look, Bert, can you get this place leased for me? And I use a kind of a tri-merge sort of platform. It's called TransUnion Smart Move. I like it because I don't need to charge for uh, paperwork and clerical expenses and that kind of thing, because let's face it, they only cost like $40 to run these background checks. That's what TransUnion Smart Move charges, I think like 42, $43. And some people find that to be a profit center, some property management companies, and they'll charge the prospective tenant like 60, $75. And it's a profit center for them. And I understand there's a cost involved, in paying people to run the credits and stuff, but I do those myself. I send the link to people based on their emails. Each tenant, 18 or over in Texas, has to have an application on file. Okay, that's the law. And we'll send out, even if we're not counting their income toward the underwriting of them as the economic viability of them being able to pay the rent each month, which is very, very important in what we're talking about as far as the background checks. But this tri-merge is basically going to be eviction history, if any. It's going to be a criminal background check, and of course, it's TransUnion is one of the three major credit bureaus, so they're also going to pull the credit. And guess what? I always tell people, do not. I have to have your 4-page. If we're renting a house, for example, the standard Texas Realtors form is 4 pages. I think it's TXR 2003. I want to say is the lease. The lease application, and I ask them on page 1, do not fill out your social security number. I don't want it. I don't want to have people sensitive information. I'm going to email you a link, and you click on the link and you give your social security number to TransUnion directly. Pay the fee, pay whatever they're asking you for. I think it's $42.99. And you pay them directly. You pay with credit or debit card. Don't pay me, right? So it's a very easy way for us as investors to do that. Lease agreements is the other way to screen tenants thoroughly, and that's to use a comprehensive lease agreement, as we talked about, that outlines the terms, the rules, responsibilities to avoid disputes, right? Because you're going to be clear with them. In fact, the Texas Realtors form is 17 pages. So it's a very comprehensive form. If you're looking to get started in leasing properties, reach out to me. I'd be happy to be a resource to you. Or if you have a property that you need to get leased, I can do that. If it's an apartment, I have apartment locating software. I can pull up empirical data, comps on the MLS, what price per square foot are rental rates per square foot. Things of that nature, what homes are leasing for, right? In a specific area of town or neighborhood or zip code, whatever. Be happy to be of service to you. So we feel like it's important to be educated. But listen, at the end of the day, I think the fifth point and the last one I'll make is going to be hire a professional management company. You're going to be so much better off on a hands-off type of situation because a property management company is going to handle everything for you if you don't want to manage it yourself, right? So They might hit you for about 8 to 10% of the rent of the monthly rents. However, consider hiring a reputable property management company. I told you I don't do those, but I know a lot of really terrific companies here locally that do in San Antonio. So I'll be happy to refer you to some of those companies. They're really, really good at what they do. Very professional, and they treat the tenants correctly. Because at the end of the day, your tenants are your customers. I've always treated tenants with respect and dignity, even if I have to evict them. It's part of the business, right? But yeah, I think that it's important to treat them fairly and honestly, right? They're customers at the end of the day, right? But this will be a company that can handle these tenant relations, the maintenance of the property, as well as the rent collection. The rest, it's going to be mailbox money for you. And that's what we're looking for, right? The appreciation of the property, depreciation over time, 27 and a half years for residential real estate. You can depreciate that over 27 and a half years. Talk to your tax strategist. If you're working with someone, make sure it's a strategist. Okay, and if you don't know somebody that can do that for you, then by all means reach out to me. I use a tax strategist, and this is what they do, right? They sit down with you and they consult with you based on what your investment objectives are, and they help you to maximize your deductions, right? Maybe a accelerated appreciation, accelerated depreciation would be something of interest to you, right? You can do a study for that, and that might be another way to go. I mean, find out from this tax expert, if it makes sense to do a study under the Trump tax plan from years back. Then that was one way that he helped us out as investors, is through accelerated depreciation, right? There can be a schedule that can be done for that. And it's basically going to be, the depreciate certain items that you put into the property as a renovation. Each one has a schedule of what you can depreciate it over so much time, right? 5 years, 6 years, 7 years, whatever that is, and they do line by line by line of everything that you put into it, right? And that's another tax strategy. Because remember, at the end of the day, it's not how much you make, but how much you get to keep. So we feel that by being educated in these matters, and by understanding these aspects of real estate investment, investors can make informed decisions to maximize their returns. That's what we want to do. Manage your risks, right? You want to mitigate the risks effectively, and of course, take advantage of the various tax and financial incentives and benefits that are available to us as real estate investors, right? So, by all means, we'll be talking about tax benefits here in a future video. I think that's video number 4, but this was video number 2, which is once again the types of real estate investing was number 1, and then number 2. This video was tips for buying rental properties. And this has been Sipping Coffee and/or Tea with Realtor Bert Taddei, an educational video series, which hopefully has been of service to you. Thank you for watching my video. Again, feel free to reach out to me, 210-376-TALK. That's the San Antonio area code, 376-8255. If I can be of assistance to you, answer any questions at all about real estate. And be sure to like this page. Subscribe to the page. We'd love to keep giving you terrific content on whatever platform it is you're watching this on. That's it for now. Thanks for watching.